Robbie, maybe can you first kind of talk about like what you think about when you hear the word tokenization and what that means, and then also kind of discuss the shift in the financial system to being more open to tokenized markets and products.
Yeah, well, when we look at the digital asset space broadly, we put it into three pillars from a BlackRock perspective, which is crypto, stablecoins, and tokenization. We think all three of those are important. And when you look at what we've done, they kind of map across those three. Tokenization is the longest time horizon to real adoption of the three, for sure. And I think there's been some maybe overinflated expectations about how quickly or decisively this trend would play out. We're talking about a major transformation potentially of capital markets infrastructure that affects all types of entities across the value chain. That's not going to come easily or quickly, right? So we're starting to see some development that suggests that this is working, that there's client demand, that the utility of being able to hold a TradFi investment exposure in a digital asset wrapper is actually compelling to investors, certainly to some of our clients. But in hindsight, it was kind of always going to be the case, contrary to what some had thought, including myself originally, that before we would move trillions or tens of trillions in assets into this new technology paradigm, that actually first institutions were going to get comfortable with small exposures to crypto itself, understanding wallets and blockchain-based settlement and being comfortable with the risk controls and the infrastructure supporting that. So that's kind of what's happening. You're seeing more institutions get into crypto a little bit, and that I think is helping to pave the way one day for a broad-based transformation in tokenization.
And you did mention stablecoins as well, because I think of stablecoins as like the original tokenized product, right? And it's tokenizing a dollar essentially. Are you seeing interest with stablecoins as a means of moving money around, or is that still a little immature?
Certainly. I mean, you could call stablecoins tokenized cash, right? We just think it's so important that we made it its own separate pillar. That's been by far the earliest adopted use case of tokenization. You see about $150 billion in stablecoins today, despite the fact that most pay no interest in a reasonably high rate environment, right? And that I think is a very important signal of just how much utility investors, users, et cetera, around the world are seeing in being able to have a dollar in a digital asset format that is global, that can be transferred in near real time at near zero cost.